perhaps. There we go. Throw it in the chat if you have. But if you're not familiar with us, we're based in the Northwest. We're out of Seattle, more specifically Bellevue, if you know the area. And I've been doing this for 3 years. I've talked to thousands of agents, partnered with hundreds of them, and we do these lunch and learns all the time because the topic of tax and accounting is objectively incredibly boring, but it's also very impactful towards not just saving money, but running your business with confidence. So my hope here is to share 3 steps that top producing agents tend to take to level up their finances. And what that really means is we'll answer 3 of the most common questions that I've encountered in my time here at Formations, which are, one, how do top performing agents structure and run their business like a business? I'm curious to know if people have taken the steps towards forming an LLC or a C corporation or even an S corporation. These are very popular topics. It's circumstantial, and I'll do my best to kind of debunk the myths around the different incorporation types and answer the question as to what an S corporation is and why it's so impactful and why high volume agents tend to form an S corporation at a certain point in their careers. Then lastly, the 3rd common question is, being self-employed means you're not a W-2 worker that has an HR department telling you to check the box to auto-enroll in 401k. You're left out of the benefit system as you are being overtaxed and without a blueprint for financial success. But that doesn't mean you don't have access to benefits. There are some compelling arguments in favor of getting a baseline retirement strategy in place, looking into HSA, FSA, health insurance. So we'll touch on some Fortune 500 level benefits that we've seen really impact the lives of our clients. And then we'll do a Q&A. Just as Gabriel said, just throw questions in the chat. Also, there'll be a QR code to connect with one of our tax consultants for a free consultation if you're interested. Let's start with an introduction. So again, my company Formations, we were formed in 2019. We're based in the Pacific Northwest, and we come from the world of tax and accounting. Really what we've seen in the 20 plus years we've been working with self-employed workers is, we're an offshoot from a more traditional tax and accounting firm out here. But what we've seen is a huge discrepancy in the market where this graph shows
about my tax filing stuff.
Agreed. Tax filing is important, and when you're self-employed, a lot of agents that I talk to have questions around how to file their tax, how to file their business, and implement some tax strategy. And that's because the questions come from a lack of attention given to the self-employed market. Even though, as you see in this chart, the self-employed 1099 community is the fastest growing cohort of workers in America. Some estimate that since the pandemic in 2023, there's upwards of 30 million 1099 workers in America. Now they assume that between 9 to 15 are full-time self-employed. It is a fluctuating market, as you all know. But needless to say, it is a fast-growing market, and there still is no cohesive and holistic financial management system out there for self-employed. And so at Formations, we see this gap. We see, we've heard for many, many years, top performing realtors, IT professionals, freelance workers who want to be solopreneurs and do what they love to do to the best of their ability, but not have any friction, right? And it tends to be the case that the most common source of friction or distraction or confusion or stress tends to be on the financial side. So there are plenty of statistics that show that self-employed workers are left behind. You overpay in self-employment tax. I'm sure a lot of you have CPAs, or maybe you're chasing them down this time of year. They talk to you a couple times a year, but it's not the right tax strategy, or it's not a full and coherent understanding of your net cash flow, right? But this isn't to focus on the negative. Really, what we want to help our clients grow into is a playbook and a model that helps you run your business with confidence with a combination of technology and real accounting professionals. We never want our clients to have a question what their net cash flow is. So we do the bookkeeping. We focus really on the S corporation business tax structure, which we'll talk a bit in this presentation about the impact of that. And we file taxes and make sure everything is said and done at the end of the day. And we want our clients to run their business effectively and have the right leverage piece to not have to worry about a tax bill or the accounting side of things. So with that introduction, let's jump into the 3 ways to level up the financial part of your business. This will be a lot of refresher stuff, I'm sure, for a majority of you. The business structure, because as a lot of you know, there are foundational pieces to running a successful self-employed business. Really, the business structure 101 that we've seen, that I've learned in my time here, are 3 key steps. 1, it starts with forming an entity. A very common one is an LLC, limited liability company, but in California, a lot of people form a C corporation for California reasons. But that entity should give you legal separation. Once you have that entity formed, it's very important to not let it go to waste, but to actually follow through and separate your business accounting. So, I would say that commingled funds is the #1 source of confusion and stress among the people that I partnered with in my time here. And having been self-employed in my past, I can say that it is hard to separate the personal from the business unless there's that foundational element from the beginning. And then having a robust bookkeeping system. Being in real estate means that expenses are flying in so many different directions. You got to spend money to make money, and it's very easy to lose track of things because your focus is on your clients and building your network, right? So having a robust bookkeeping system that tells you what to write off or what to do to have an accurate P&L and therefore accurate tax strategy is ever important. So to follow through on that, here are the simple steps. If you're a sole proprietor, haven't yet looked into incorporating, go to sos.ca.gov. This is a snapshot of what the SOS looks like, Secretary of State website looks like here in Washington. And the incorporation process, if you decide to form an LLC or a C Corp or a partnership, any entity that you choose that best suits your business, typically takes 3 to 5 business days, but there is some fluctuation. So don't be too alarmed if it takes 2 to 3 weeks. It depends on the capacity of the Secretary of State at that particular time. But typical turnaround time is 3 to 5 business days. And again, once you get that LLC or that entity, you've got legal separation, meaning that you as a human being aren't personally or financially responsible if you were to get sued or incur debt. Ever more important, once you get that LLC, in addition to legal separation, is the financial separation. We do the bookkeeping for our clients. We partner, our accounting system, Xero, partners with Wells Fargo. And with a click of the button, as you see here, this is how easy it is to form a business checking account, make it formalized, get the EIN that's associated with your business, attached to your business checking, get a business checking, credit card, and make sure everything is siloed so there's no commingled expenses and no confusion come this time of year, right? And ideally, if you really are a high capacity, high volume agent, having a robust bookkeeping system like QuickBooks or Xero, and this is a snapshot of our Formations dashboard where we want our clients to have an accurate P&L of their net profit based off their GCI minus expenses, so they have an accurate forecast of what their tax bill will be, and therefore you can implement certain tax strategies. So it's a cool snippet or just like a real-time accurate view into what the health of your business should look like. But of course, there's a lot of questions around different expenses, and I won't go into this. I want to keep the presentation to around 30 to 40 minutes. But if you have specific questions regarding types of expenses, meal, entertainment, vehicle, home office, these are very, very common questions, and we encourage either in the chat or at the end if you want to connect with one of our tax professionals for a free consultation. We will explore the S corporation model and do some discovery to see if it might be a good time to consider. But you can also ask us our opinion, or maybe a second opinion on your current tax strategy, because there's a big tax code out there and a lot to consider if you're looking to maximize your write-offs. So now that we've laid the foundation and talked about the business structure, we're talking about having an LLC, for example. Now let's transition to the second most common question, perhaps the first most common question that I've experienced in my time here at Formations, which is, what's the S Corp? Like, why, what's the big deal with the S Corporation? Why is it popular? How does it help me save money? Like, what's in it for me? Well, an S Corporation, to debunk any myths, is simply a way to be taxed. It's a tax election. So it's not an actual entity, even though in the state of California, you can fast track to becoming an S corporation, but the underlying entity is typically a C corporation. Really, what an S Corp refers to is you as a small business owner say with an LLC, you elect federally to be taxed under subchapter S of the IRS tax code. This little form here, 2553, is the method to do so. And once the IRS approves that letter, your business is green light being taxed as an S corporation or taxed under subchapter S of the IRS tax code. So that's great. It's a tax selection for a business. I get it. But what's the big idea? Like what's so cool about it? Well, a bit of context as to why it should be considered if you're a self-employed worker, especially one who's netting over 50, 60K as a benchmark. It has everything, and it only has to do with the self-employment tax. As I'm sure all of you know, the self-employment tax isn't a tax that's imposed on you for being self-employed. That'd be weird. Rather, it refers to the fact that you pay the full FICA tax yourselves, that 15.3% tax that covers Social Security, 12.4% of the 15, and Medicare, 2.9%. That's fully on you to pay. Whereas if you were a W-2 worker, like myself at Formations, you'd only have to pay half. So I'm sure a lot of you have experience working in a W-2 setting. And here's a hack. If you want to take this to your CPA and ask them, hey, should I be an S corporation based on my 2021 or 2022 return, what would you suggest? And I'd implore you to have them look at Schedule 2, line 4. That'll tell you exactly how much you pay in self-employment tax. And bear in mind, the decision to move to an S corporation is conceptually, it's available to you to make it more fair, to make things fair, as if you were a W-2 worker paying half of that FICA tax. That's in a way the end result of the S-Corp tax election. So that's, high level, the concept behind the S-Corp and which specific tax it affects. It doesn't affect federal income tax or state income tax. It only affects the FICA or self-employment tax. Now, the method behind running an S corporation is, as you might guess, it actually has you play by the IRS rules and implement a bit of a payroll structure for yourself. So what you can't do is you can't change the 15.3% FICA tax percentage. But what you can do, what the S-Corp tax selection allows you to do, is to take the total of your income and mitigate it to a certain amount that is subject to that tax. So bear with me here. When you decide to make the S-Corp tax selection, you have to divide or bifurcate your income into two categories. You'll have to define a portion of it as reasonable salary. So you'll actually be taking a W-2 payroll. You'll be paying yourself as the shareholder of your business as if you're an employee. So you have to report this. Like you have to report a W-2 payroll. You have to withhold taxes through a payroll system. And there's even a business tax return, the 1120S for your S-Corp, to report all the payroll and salary activity throughout the year. But that's a portion of your income, right? Then the other portion are your business profits, which at the end of the day on your 1040 will be reported on a K-1 form. So these two pieces of paper, you receive the 1099 from Keller Williams. And then if you have the S-Corp model, you move some P's around the plate. And at the end of the day, come tax time, you'll have a W-2 form and a K-1. Those two together will amount to all of your net income, right? But here's the impact of it, because the key behind the S corporation is that only the salary portion of your income is subject to that 15.3% FICA tax. The remaining portion of business profits are not subject to FICA. They're still subject to federal and state taxes, but when it comes to FICA, they are FICA tax-free. So here's an example of how impactful this can be. Suppose you're making 120K gross with 20K expenses, so a nice even $100,000 of 1099 income. Now, if you're a sole proprietor or an LLC, you're paying the full self-employment tax. That's 15.3%, $15,300 roughly. When taking Cubit into account, this might be a little less, but for simplicity's sake, let's look at $15,300 on 100K net. Now, suppose you've got the LLC, for example, and make the S-Corp tax election, and you're funneling your income through that system, dotting your I's, crossing your T's, making sure everything's in compliance. And at the end of the day, throughout the year, you're defining 40% of your $100,000 net income as reasonable salary. So you'll see that W-2 form at the end of the day, and you'll be withholding tax, FICA tax, based on this $40,000 amount. Now, the tax savings in this example is the difference between top and bottom. It's the difference between roughly 15,000 in FICA tax and around $6,000 in FICA tax, which results in around $9,000 in tax savings. So it's pretty significant. Again, the remaining portion of your $100,000, the other $60,000, isn't tax-free, but it is FICA tax-free. So a $0 FICA tax bill by bifurcating your income and playing by the IRS rules for how the S-Corp structure is to be maintained. But based on your income, it can be very impactful. Our CPAs here at Formations have been managing S corporations for decades, and the kind of benchmark income figure that we've seen is around $50,000 net income consistently is a healthy benchmark for considering or starting the conversation about forming an S corporation. If you're in your first or second year, even if you had a really standout year the year prior, an S corporation might be a good strategy, but it might be too soon to say. So consistency and confidence that you're going to at least hit that net income threshold of around 50K. That's where you should be saving a lot more than you spend to manage the service. That's a good threshold. But you see in this chart, starting at $80,000, assuming a 40% reasonable salary. So you'll notice the tax savings on the far right, if you're making 80K net, is around $7,000. If you go up to 150, it's around $12,000. If you go up $100,000 from there to 250, it does kind of taper off. That's because the FICA tax itself does cap, the Social Security portion, does cap at a certain number, around 160K. So suffice it to say, the most you could possibly save with an S-Corp is around $16,000. But the exciting thing is, if you really are a top producer, high volume agent, and you're close to netting $100,000 every year, or sorry, close to netting $500,000 or over $300,000 every year, the business structure with the sound bookkeeping and maximizing write-offs with the S-Corp tax election, those two combined should be saving you, $20,000 plus a year, in addition to good tax strategy and defining, what retirement contributions should look like, what other benefits you might want to implement in terms of maximizing your tax savings potential. That sort of conversation becomes warranted and very exciting for a lot of people. So again, it's all about communication. And this leads into the last portion here, which are the Fortune 500 level benefits. Being 1099 means you're more or less on your own to finding what's out there in the market. A lot of people search health insurance options, group health insurance, put away money into a traditional IRA. But remember, it's if this is something that's new to you, it's very common because you don't have the same luxury and setup and privilege as W-2 workers do. Like, I don't ever have to worry about my taxes being withheld. I know that my billing team will handle it. I don't have to worry about, my HSA or 401k contributions, because I know HR will handle it and Gusto will handle it, and they'll even match me. They'll give me free money. But when you're self-employed, you got to seek this out yourself. And it's important to stress that it's common to not have any retirement plan. There are some sources out there. There was an article recently, I think it was last November or July, that found that about a fifth of full-time self-employed never save for retirement. They also found that 34% save from time to time, which we know what that means. But what I found in these articles is that it's something that people are interested in. There's just not a very easy and obvious way to invest in a way that makes sense. But one thing that I found very interesting when I first came onto Formations and was thinking to myself, when I was self-employed working with my friend Sam, I wasn't thinking about an IRA or putting money away. I had a 401k for my previous job. But the power of compounding interest was something that I found very interesting, which this graph here from Business Insider shows. It's not worth going through all the details, but this shows what a simple $300 a month contribution can result in if you're starting to contribute to retirement at the age of 25, 35, or 40. Just $3,600 a year. You'll see by the time each of these three people retire, the compounding interest effect with a simple rate of return of 5%, so the current market rate, close to the current market rate, will more than double your investment by the time you retire. So just some simple passive pre-tax retirement contributions goes a long way towards aligning yourself in the position you want to be in most cases. But of course, it's worth a conversation, which we're more than happy to have if anybody's interested. But as far as the additional benefits, I'll breeze through this portion. It's not worth going too deep into the weeds here, but I find that some of the most common conversations I've had are about health insurance, premiums being deducted, running them through the S corporation, the business. Adding kids and a spouse to payroll is very common. A lot of people have, some kids doing some work for the business, Instagram, putting up signs. So there is a tax strategy to that as well. The HSA and cafeteria FSA plan. So, there's a world of tax strategy out there, and depending on your circumstances and your goals for the next 5, 10, 20 years, it's worth looking into what's available, because it could go a long way towards, putting you in the right position. So coming on the 30-minute mark here, right on time, I'll do a quick recap and then we'll open up for questions. So the first building block here is building a strong foundation. That's really just if you're in your second, third year, making sure that you have the right entity formed for legal separation, bank separation, and just never having a question of your net cash flow. It's good to understand your profit and loss, of course, but really what that translates to is an accurate withholding of estimated quarterly taxes, not having the looming stress of an unknown tax bill come this time of year. And with that right foundational, those right foundational tenets, then transitioning to an S corporation, if you tend to net 50 or 60K or more, that an S corporation tax election could save you $6,000 or more. I feel like a Geico commercial saying that. But with that S election, it is impactful towards your bottom line in most cases. So definitely reach out to your CPA or us if you have questions. And then lastly, with that structure, with that clarity, with the support from the right accounting team, looking into benefits, even if it's simple retirement, or if you're really, a high volume earner, perhaps something like a defined benefits retirement plan where you put 6 figures into retirement pre-tax could be warranted. It's all case by case, and love to answer questions regarding additional benefits, but those are really those are the 3 steps towards financial success that I've seen. So I'll move to the QR slide here. This is my associate Brian Wallace. He was supposed to join today, but he wasn't able to. But if you're interested in connecting with him, he'd be more than happy to answer your questions, whether it's about capital gains, retirement strategy, if an S-Corp's the right fit. So we're here to help. We've learned that education is a necessary foundation for all agents and self-employed workers as they're first looking into this. And we'd love to hear your thoughts and answer your questions.
And I am here, by the way.
Hello,
everybody. I did jump in. Guy was on a call, but I will say hello to KW out here in Pasadena, first and foremost. My name is Brian. I am part of the Formations team. Sorry for not being able to attend, but I see the room. You guys look excited, very excited, right? But just by a show of hands, how many people are excited about tax season this year? Okay, there's 2 people excited about tax season. That says a lot. So the reason I asked that question is that I do want you to know that tax season is a man-made deadline, okay? And if you're not excited about tax season, it's because there is something in your inner being telling you this feels off, okay? And the reason it feels off is because tax season is literally all year around. The IRS, I promise you, as you are sitting in your office in your chairs, drinking coffee, you're getting taxed, right? You're to go to sleep tonight, you're gonna be in REM sleep, having great dreams about vacations. The IRS is going to be taxing you in your REM sleep. So what I want people to do is just switch their mindset just a little bit and realize that if the IRS is taxing you every single moment of the day, do not wait until what they call tax season, which the word season means it comes around once a year. By design, they want you to think about it once a year, because if they're taxing you 364 days out of the year and you choose to start strategizing against the system that's been in place since 1862, you're on the losing end. Tax planning needs to happen every single day. If the system is taxing you every day, You should be planning against the system every single day. That is the only way to maximize your tax savings and utilize the tax code to leverage it in the favor of the payee, which is you. So just switch that mindset, get out of the status quo, and know that the next time you're on vacation, you can look at it in a different aspect to know that if you choose a team, even if it's Formations or another team, to strategize for you every single day, you are putting yourself in a position to beat the system. It's meant to be beat, and if it wasn't, they would have never gave you a tax code to actually decode. That was just all I want to say, and thank you for your time. It's been a pleasure meeting all of you.
Yeah, that was awesome. Thank you, Brian. And thank you everybody again for having us. And yeah, reach out if you have any questions.
So Isaac, I had a question. I think sometimes it can get overwhelming with, okay, if I'm an S-Corp, now I have to run payroll. What does that even look like? Do you guys have certain payroll platforms that you recommend that are bare bones? Because I mean, we're not going to be running 15 people on our payroll.
Right. Yeah. So we highly recommend Gusto. They're our payroll partner, but they're also a great professional employer organization. So they've got a marketplace with a lot of benefits. So if you have an S-Corp and want to run payroll, Gusto is great for payroll, but also they've got some affordable health insurance plans, some partnerships with retirement vehicles. So payroll or Gusto is fantastic. Paychex is popular. ADP, the Goliath in space has a good self-employed payroll option. I don't know about their benefits for self-employed, but Gusto is what I would recommend personally.
Gotcha. Thank you.
Of course.
What other questions do you guys have? I have a few more. You had mentioned that in California, there's kind of there is a difference, but people choose between LLC and a C Corp. What are the significant differences between those?
Yeah, so the significant differences between an LLC and a C corporation, really the way I think about this is if you are a single person working in real estate, the necessary components of running a healthy business are, kind of everything mentioned in this slide. So an LLC ticks all the boxes for legal, separation, business, financial, right? A C corporation has additional components that make it very enticing. If you're planning on issuing different classes of stock, bringing on additional shareholders, essentially growing your business and selling it at a certain point in time. So if you're going the C Corp route, we'd recommend working with a business attorney. However, if you do have a C corporation and you are a single member entity, you can make the S election, which does prevent you paying corporate tax, which is good. So it's not uncommon for people to form a C corporation at the California state level and then make the S Corp tax election. That is, I've been told it is a good tax strategy because members of a corporation can opt out of the California payroll tax, whereas shareholders of an LLC cannot. Don't quote me on that. I'm not a CPA myself, but this is a great example of something that if you want to explore further, book a time with one of our CPAs. Brian can help you out there.
Okay, awesome. Thank you.
Of course. Yeah. Thank you.
Question.
Barbara.
So what is exactly the difference between the S Corp and the C Corp? How would I benefit by having the S Corp over the C?
That's a great question. So really the benefit of the S corporation is it's simply a way to be taxed. So even though there's Corp and S Corp, it's not actually a corporation. It's a bit confusing. It took me a while to grasp it. But really the big idea behind the S Corp is if you are a self-employed worker making over $50,000 net income as just a general figure, the S corporation will result in you paying significantly less self-employment tax. That's it. A C corporation is an entity at the state level that, as we were talking about before, has certain characteristics that make it enticing if you're planning on expanding your business beyond just simple transactions, exchanges. If you're looking to expand in different bylaws and classes of stock, it's a bit more complex, but really for all intents and purposes, for you as the individual shareholder, it gives you the same legal separation as an LLC. But it's important to remember that S-Corp is just a way to be taxed, and it only affects the amount of self-employment tax you pay.
Got it. Okay, that sounds like the way to go. Thank you.
I would say so, yeah.
Okay.
Yeah, Isaac, great information. Appreciate you being here. Really helpful. And I would agree that every day is a tax day, so plan ahead. Because you don't want the IRS knocking on your door tax season time and say, I need $50,000, and you don't have it. And the reason I know, I've been there, and it's not a fun place to be. So plan ahead. Thanks for being here. And also, Jane and I, just as a personal note, all of our companies, corporations are S corporations here. And the reason for that is so we don't pay corporate tax and then also individual tax. So you do save quite a bit.
Absolutely. I appreciate that. And yeah, thank you again for having us here. We're happy to do these anytime. And yeah, it is important. A lot of people seek out this kind of education, and, we don't like to do a sales pitch, but we, of course we have to explain what Formations is, who we are, but really the important component is walking away with some knowledge that there is a structural blueprint to improve your bottom line. That is available, to Brian's point, for everybody who's 1099. It's just the problem is the IRS doesn't have a marketing department, right? So you have to take proactive measures to seek these out yourself. But that's awesome to hear. I appreciate that.
I have one more question. So what do you see as a missed opportunity or an error when agents are doing write-offs? Are there any pitfalls that they fall into that you say, okay, hey, you can't write that off? Or something that you say, hey, some really good agents are writing these things off?
Yes. First and foremost, it needs to be, we work with a lot of real estate agents, and a lot of ladies will ask me, hair, makeup, nails, am I able to write it off? The answer is no. Okay. No, you cannot. It needs to be for the business. If it's going to be something that is going to be necessary, then it's considered a write-off, first and foremost. If you have to ask that question, it's probably in that gray area. If it's in the gray area, which I don't believe in, by the way, it's either right or it's wrong. Gray means wrong. Okay, gray is not maybe, it's wrong. And the other thing is, too often people, small business owners, are playing checkers when the system is playing chess. And what I mean is they start to over expense their business to try and lower their tax liability. But then at the end of the year, their business looks cash poor, so it doesn't look profitable, which in turn makes you a very person that if you're going to get a loan, that's going to hurt, right? Your interest rates, even with a great credit score, you're going to be considered a risk, a high risk, because your business doesn't look profitable. You look cash poor. And so there is a way to make sure, doing it the correct way, utilizing the tax code, that you can write off between about, what they say is about 20 to 30% should be what your expenses run into. Now, of course, once in a while, it's going to be a little high because maybe you are renting new office space or whatever it might be. But in general, 20 to 30%, just a heads up.
Awesome. Thank you.
I would add to that. I would say that mileage is also something that's very overlooked for obvious reasons. It's a bit of a tedious thing to really manage. But downloading an app like MileIQ, I've heard of, oh man, I'm spacing on the name right now, but there are some apps out there that connect to the car's Bluetooth or whatever system that automatically turns it on. You can configure it so that it'll start tracking as soon as you plug it in. So I don't know, seeking out the right technology, we recommend MileIQ because it interfaces well with our bookkeeping system, but mileage is definitely something that's overlooked. Yeah.
Thank you.
Okay.
What other questions, guys? Any other questions? All right. Well, we are going to, we have this recorded, guys, so we're going to be sending this out. Isaac, I appreciate you. Brian, thank you for your time, guys. Really helpful. Hearing the $50,000 kind of, no one ever wants to answer when it's time to file, to change your entity. So to hear $50,000 consistently is really helpful, I think, for a lot of agents, because I think that's always the question is, when is it time to do that?
I would agree. I think, yeah, if I'd say if there's one big missed opportunity from like a 30,000-foot perspective, and this is true for me when I was working with my friend Sam and self-employed, it's, you know, shying away from the conversation. So, you know, a lot of accountants out there and companies will, you know, translate the tax code in more tax jargon, just to confuse matters. And a lot of people settle for something that's not up to par or meeting their expectations. But, you know, having a proactive approach towards looking into this yourself can really help you save $2,000, $3,000, $10,000, $20,000 a year, which year over year really does make an impact. So, you know, set aside some time, tax season, mid-year, end of year, just to reach out to local CPAs or companies like ours, get a second opinion, get a comparative analysis, and a consensus to what is right for you in your business. Because there's no one size fits all. It's always an ongoing conversation, but being proactive is highly recommended. It can go a long way towards financial success. So if anybody wants to connect with Brian or someone from our team, I threw the meeting link to connect with him in the chat. But yeah, thank you, Gabriel and Robert and everybody here for having us on, and we hope to do another one of these in the future.
Definitely.
Thank you for your time.
Thank you very much. All right. See you guys. Thank you.
Awesome. Thank you.
Thank you.